everyone, Julius here with a new video at the start of the week beginning Monday the 22nd of July. Before we begin, apologies for the messy background. You may have noticed that I have been moving around my desk over the last few weeks because of some remodeling that we are doing here in my office. And I'm back now in the spot where my desk used to stay and where it will be staying. But there is still a lot of work to do, because you can see here that there is some paper on the floor to protect the new cement floor, but we still need to do work on the ceiling, and there's a big hole there because we took down the chimney and we threw all the debris down here. There's new wiring everywhere. I can't show you that. Well, you can see how there's the new wiring, the new contacts, the new outlets. The walls need to be done. And of course, what it all started with is the dividing wall, where you can see in that cabin there should be a dividing wall, and you see the new steel beams that are in. There's the old one, the red one over there. That's the old one. That's too light. That caused all the movement of the building, and it was not level anymore. So we put in two new steel beams on the sides, and there's actually one underneath that you can't see anymore. So all of that is now done. My contractor went on holiday for 4 weeks, so I'll be sitting in this. Somebody said a design loft, and I like that description now. Anyway, that's the reason why you see the messy background. Oh, by the way, those wires outside are for the new air conditionings that will be built into these two rooms. Anyway, still lots of work to do, but you seem to enjoy it. So here you go. There's a live view of the refurbishment. Let's get back to the markets and what's going on there. Interesting rotations as usual, and a full week ahead, and I'm very curious to see how the market will continue to rotate. Obviously some weakness for the S&P 500 last week, but on the other side we had some strength in mid and small caps. And what I wanted to do today, first of all, it's going to be a pretty short video, I think, because it's after midnight my time now, so the market has closed 2 hours ago, 2.5 hours. And the reason is that I had to basically move all my stuff back here and get set up and pumped up. So didn't want to leave you alone. As I said, interesting rotations going on, and what I want to use here is that market factors panel. We've had that up on the site on StockCharts for a couple of months already, and I seem to be using it more and more as a very quick gauge of what's going on in the markets and how they're doing. So these are basically 9 buckets: value, core, and growth. So value and growth, and core is everything, and then large, mid, and small. And you know that I do value growth rotations on RRGs every now and then. And what I also did is I've set up an RRG that uses those 9 market factors. What you may have noticed is that when you click on one of the boxes, you can actually open a chart. So when I click here, this is large cap core, that is SPY, that is the core market. So that's everything, S&P 500, value and growth, that's core. If I click on S&P 500 growth, I will get a chart that is the S&P 500 growth part. And so each of these 9 buckets is linked to an ETF, to an underlying ETF. And what I've done is I've brought all 9 of those on an RRG. And you can do that, you can bring all of those there, and then you have to save it as a bookmark on your browser. You know what? I will put that link in the description of this video. And the interesting rotation that we see on this RRG is the sheer domination for large cap growth over the last months. SPYG was inside the leading quadrant, opposite pretty much all the others, since, so here happens, end of January 2024. And if you go back, you can see that it was even earlier, because that little blip there this little blip was only very short. So gross, large cap growth, this is the real move. So April 2023, that's when large cap growth actually started to dominate. And then when we browse through, you can see that it basically remains on the right hand side of the graph. And then it pushes back up there, remains on the right hand side. We've got a short period where large cap value comes into play, and then the others come there, and that's in the period January 2024, and that very rapidly rotates back again. And then you can see that's the last part of the rotation, again dominated by large cap growth in the end here. MDYG is mid-cap growth, so still growth everywhere, and then it concentrates on large cap growth. And what you see now is that large cap growth over the last 3 weeks is starting to roll over. But more interestingly, what I noticed is that, or what was observed, is that large cap growth was going opposite pretty much all the others, but that also included small cap and mid cap growth. So not only was large cap growth, or was growth outperforming value, it was also outperforming mid cap growth and small cap growth. Usually you see growth and value moving kind of in tandem with some subtle differences. But this was very domination. This was a very outlier. And what you see now is that the other segments of the market are now starting to curl up, even mid-cap and small-cap growth. And that's interesting, because now where we had the story, or where we had the observation that it was only large-cap and mega-cap growth stocks that were driving the market higher, you can see how last week those stocks, or those groups of stocks, were driving the market lower, but the other tails were actually rapidly improving. And we can see that when we go to the daily RRG for this group, where you can see a massive improvement of pretty much all tails except for large cap growth. So even small cap growth and mid cap growth were rallying. You see that, so here, if we do the percentage change, you can see that small cap value was the winner here, and then you had small cap growth following with 1.6, and then it's mid cap value, it's basically mid cap, and then mid cap growth is the last one, and then SPY, which is the core, and S&P 500 growth were the real drivers on the downside. By the way, we're using the benchmark here is the S&P 1500, the S&P Composite S&P 1500, which makes the S&P 500 the core, and you can see how that is also a part of the rotation. So the S&P 500 and S&P 500 growth are now moving into the lagging quadrant on this daily RRG. So a very clear rotation out of large cap growth stocks. We've seen that happening, and we now need to assess how that will continue. Is this the beginning of a more pronounced move lower for the market as a whole, Or is this just a little hiccup, and after this rotation, will the market rotate back towards large cap growth, and will we get a continuation of that rally? Or will we get a broader participation on the upside? Because right now the participation has been broader, but the markets were still driven lower by the decline in large cap growth. So let's see if we can figure out and find some sort of a pattern on some sort of observations that will help us to assess the possible scenarios for the next coming weeks. When we start with the overall market, that's the S&P 1500, the S&P Composite, then I think we can safely assume that this bigger uptrend here is still in play, and even the one that started here back in April 2024, the rhythm of higher highs and higher lows is still in place. And what you see is that SPSUPX, the index, is now testing its previous resistance area around 1240, and we bounced off of that today. So we held there, meaning that the rhythm of higher highs and higher lows for the S&P Composite is still in play. Now let's go into the breakdown of those factors and look at each of those charts in terms of price in combination with the RRG lines. So this is the S&P 500. That's essentially large cap. So large cap core. That is what the S&P 500 is. That's what SPY is. Looks pretty similar to the composite, not surprisingly. But when you compare it to the composite on a relative basis, you can see that some serious damage has been done. The relative strength line itself broke down. That happened already, well, I mean, I'm going to say where did that happen? Somewhere 11th of July, 10th or 11th, like 10, 15 days ago. And you can see how the RRG lines actually rapidly declined, and they're now both below 100, pushing the S&P 500, pushing SPY into the lagging quadrant. So there's definitely some damage done to the SPY chart, to the S&P 500 core chart, versus the composite. Now, if we look at mid-cap, so this is the mid-cap index, MDY, there's a different picture. So this one moved sideways and recently broke out, and we just dropped back below this overhead resistance level around 555, but today we bounced back above it, and we put in a new low, which was pretty much exactly on the lows here in June and then here in March with those. So I'm going to say that this is a support zone between 548 and 554, and we just bottomed out in that support zone. And you can see how the relative strength line of MDY has reversed its course against the composite and is now moving higher, so pushing both RRG lines above 100 into the leading quadrant. And it's even better visible for the small caps, which were sideways since the start of the year, in a range between 43 and 39.5. So let's say $3.50. If we add that to the breakout level, we have some upside potential. We almost reached it already last week. We now came down, and here also we bottomed out today around 44, which is above the previous resistance area, which should now catch any declines. And that means that the buyers for these small cap stocks were even more aggressive. They were coming back to the market before we were hitting that support area. The next one would be the growth part. So this is the S&P 500. This is large cap growth. This is the area of the market that got the damage, and you can see that with the gap down. And we're kind of finding support around 79.5, bouncing off of that today. But here I think that you can see a strong resistance area around 82, maybe the top area of this gap, which is 82.66. So between 82 and 82.66, there's a pretty heavy overhead resistance for large cap growth. And when we break this 79, 79.5 support area, I think there's more downside to come for these large cap growth stocks. And obviously the RRG lines are being pushed down and large cap growth is being pushed into the lagging quadrant. By the way, we're looking at daily charts. So we're looking at a move that is probably going to play out in the next, I'm going to say like 3 weeks, 2 to 3 weeks probably. If we look at mid-cap growth, a lot less damage has been done. As a matter of fact, compared to the S&P Composite, we are actually moving up. This is pushing into the leading quadrant. And if you look at the chart, you can see how this is also pretty much looking like the mid-cap. So not only mid-cap growth, but mid-cap core, which is bottoming out against the former resistance level, now acting as support. And then we got small cap growth, and that's even better. That's above its overhead resistance level. It's way over the gap area, and we got a very nice reversal with a higher low being put in place today. And look at how this segment of the market, this small cap growth segment, actually pushed higher and reversed the course of relative strength, which was in a very clear downtrend since the beginning of the year. And here we have the value ETFs. So this is large cap value. Very nice breakout, rally, and now today actually the former resistance is now tested as support and it's holding so far. If you look at the relative strength, it's not as strong as the small cap and mid cap per se, I need to tell you, but it is improving versus the composite index. But you can look how this is. I could argue here that this is a pullback to a former breakout level in terms of relative strength. So a little bit more careful with large cap value, but it's still beating large cap growth by a mile at the moment. And then here we have mid cap value, kind of same story here. Nice breakout, former resistance now acting as support holding, nice bounce, RRG lines pushing above 100. So all in all, that is getting better. And then here we have small cap value, and you can see here also that we broke out of the range, put in a new low, a higher low at the support zone, and you can see how relative strength is improving. And that's pretty much all zooming in from what we saw on that RRG chart. Let me bring that back one more time. So this is the weekly. What we just looked at was the daily, and you can see the strength of pretty much everything except large cap growth and large cap. SPY is large cap core. I think that as I said, there's quite some damage done to the large cap growth and large cap. So SPY and SPYG seriously broke out of trending channels. They broke support, and there's more risk inherited there. The other tails, as we noticed, were all pretty much in breakout mode. So that leaves us with a very interesting scenario. Over the last few months, large cap growth has driven the market higher, while all the others were not participating. So I told you many times, the base of the market, the foundation of the market was getting narrower. That meant riskier. And then we were talking about SPY as being the market. What we see now seems to be the opposite of that situation. It looks as if large cap growth and large cap in general is now going lower. And at least last week it was dragging the market lower. We have seen one uptick on today, Monday. And the question is whether the broader participation, which we now see, because all of these segments are now moving higher and only large cap and large cap growth moving lower, will that be enough to keep SPY or the composite at current levels or push it higher? From a market capitalization point of view, that's going to be difficult. If large cap and large cap growth is really going to deteriorate, I don't think that the composite nor SPY will be able to hold at current levels. We very likely will see a decline. But it might not be in these broader market indices a super big decline because we've got support from all these other market segments. So the most risk right now is in large cap growth, clearly. As a result of that, large cap is at risk, but not as much as large cap growth. And you can see how SPY is close to the benchmark, close to the composite, because there's a very high correlation there. And then here is where your opportunities lie. And the question is, will all these segments together be strong enough to offset the risk and the possible declines that we may see in large cap growth and large cap? And I want to wrap it up and finalize this week's program with a look. Maybe you don't look at that too often, but it popped my mind that this is a perfect time to use correlation. And what I did is the charts that I just went over are in a chart list. So I have a chart list that has these market factors in them, and you can view them in different ways. So I was looking at the summary and clicking in them to view the charts. But there is also a view called correlation. And if you look at correlation, correlation means how strongly correlated the symbols are. And high correlation means that it doesn't make a lot of difference trading one or the other. Now, a 20-day correlation to me is, well, we can do it. And what you see here, so let's do SPSUPX. And then obviously here, SPSUPX has a 100% or a correlation of 1 with the benchmark, because that's what we're comparing against. And then you can see how SPY is 99, large cap growth is 74, and so forth and so forth. If you want to diversify in a portfolio, you need to watch for low correlations, because the way to read this, the lowest correlation here, 0.62, is for value or small cap value. What this means is that if over the last 20 days, the composite went up 1 point, small cap value went up only 0.62. So it's not negatively correlated, they're all moving up and down in the same wave, but it's a lot less. Now if we make this a bit longer, say 6 months, that's a reasonable kind of trading type of, if you want to hold it for a couple of months. Now look at this. The last 6 months, composite and S&P 500, correlation of 1. This is very high, but from here down it becomes interesting. So mid-cap value, small caps in general, and small cap value, not so much small cap growth, that still has a correlation of 0.78. But small cap value, 0.32. That's really been an outlier. So if the scenario plays out that large cap growth is under pressure, and that will drag down the S&P 500 and the S&P composite, small cap value is probably the area where you want to go shopping, because there you can find stocks that have a very low correlation with the broader market, and something that impacts the composite and the S&P 500, like a mega, some mega cap stocks, Meta, Google, Nvidia, you name them, all the FANG stocks. When they got hit, you will be able to find small cap value stocks that are agnostic to those market moves, to those general market moves. And that's how I want to bring in correlation to your workflow and as a tool to find potential trading opportunities on the long side while the market is under pressure or moving sideways. I hope this makes sense. I hope it helps. If not, put it in the comments. I love the discussion. I'll try to explain it a little bit more there if it wasn't clear already. And other than that, I hope you enjoyed the show. Thank you for watching, and to see you again next week. Same time, same place.